Welcome back to Living 808. Every Tuesday, Kay Mukaigawa joins us for another edition of Living Akamai. Today, she has another special guest in the lounge to focus on reverse mortgages.
Joining me today is Nelson Oyatamari, Branch Manager of Primary Residential Mortgage, to share more information about reverse mortgages for our senior homeowners. Welcome back, Nelson.
Thank you for having me.
We've worked with the senior community for many years and have loved educating them in our lifestyle seminars. When it comes to reverse mortgages, we realize there are a lot of misconceptions. Can you share a little bit more about reverse mortgages?
Sure. A reverse mortgage is a federally insured home loan available to homeowners age 62 or more, and it gives them the ability to convert a percentage of their home equity into tax-free cash. The number one benefit of a reverse mortgage is that the monthly loan payment is optional. You still have to make other housing-related payments like your real property tax and homeowner's insurance, but the reverse mortgage allows you to use your retirement income for other things other than your mortgage payment.
I know as we get older, we have a lot more healthcare expenses, so I can see how this would really help. Could you share more details on how a reverse mortgage actually works?
Sure. Let's start from the beginning. A long time ago, when you first bought your home, you established a purchase price, you put a down payment, and you got a traditional mortgage to finance the rest. So each month, part of your monthly mortgage payment was used to pay down your loan balance. And hopefully, now that you're retired, you have a very low mortgage balance, or if you're lucky, you have no mortgage balance at all. You've built up a lot of equity or value in your home. So when you apply for a reverse mortgage, we analyze this equity or value that you have, and based on your age, we determine how much money that we can give to you. If you opt not to make a mortgage payment, you still have to remember this is a loan, so there's interest due. So if you don't make the payment, that interest is added to the balance, and over time, your balance will increase. So when the last surviving spouse either passes away or permanently moves out of the home, the entire loan balance becomes due.
So you said the amount of money somebody can borrow depends on the owner's age and the equity in their property, but I didn't hear you say anything about income or credit, the usual things we hear about when getting a traditional loan.
The qualifying criteria for a reverse mortgage is simply the equity you have in your property and the age of the youngest borrower. We do check your income to make sure you have enough money to pay for your property taxes and homeowner's insurance, but your credit or your income is not used in the qualifying process.
So how does a mortgage loan get repaid?
So let's assume 20 years after getting a reverse mortgage, dad unfortunately passes away and mom permanently moves in with one of her children. So the home is no longer their primary residence. If they want to keep the property, mom or their children can simply refinance into a traditional mortgage and pay off the reverse mortgage balance, or they can choose to sell the property, pay off the reverse mortgage balance, and keep the remaining sale proceeds.
I know this is not true, but I still hear people say, if you get a reverse mortgage, the bank will take the home when the homeowner passes away.
Yes, we've been providing reverse mortgages in Hawaii for nearly 18 years, and this is still the number one misconception. The answer is no. The lender does not take title to your home. Mom and dad always retains titles and ownership of their home. It is no different than a traditional mortgage.
So how have customers benefited from using a reverse mortgage?
Sure, there are two main benefits. The first is improving monthly cash flow. The loan is called a reverse mortgage because instead of making monthly payments to the lender pays the borrower. The borrower can receive their money in different ways. They can receive a lump sum. They can receive a set monthly amount for life every month, or they can draw out money as needed, similar to a bank home equity line of credit. With senior homeowners usually on a fixed income, this added cash flow can help with increasing living expenses or just to enjoy their retirement years. The second benefit is preserving existing assets. A reverse mortgage gives the senior homeowner another source of cash. In case they need the money now, they don't have to take it from their retirement or investment accounts.
So thank you, Nelson, for sharing. And if you want more information on reverse mortgages or would like to attend one of Nelson's seminars, Give us a call, and perhaps the reverse mortgage can be an overall part of your retirement strategy. We can be reached at 808-725-2000. We look forward to seeing you next week, Tuesday. Let Engel Invokers Honolulu simplify your life.
All right, thanks, guys. Great information. And of course, you can check out all the past episodes of Living Akamai on our website, KHON2.com.